The 2008 financial meltdown should have been a wake-up call, but it looks like that was just a taste of what's coming. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Some businesses are just too big to let fail. We've all heard that before, right? The phrase too big to fail really became popular during the 2008 financial meltdown because that was when the government came out and they started bailing out big companies like Bank of America, Citigroup, GM, Chrysler, because, well, these companies and banks were too big to let fail. The whole idea of being a business that's too big to let fail is if you were to let this business fail, it would cause a disastrous effect to the economy. You'd probably see millions of people laid off. You'd see secondary and tertiary businesses go out of business, like car part and car supplier manufacturers and companies. You'd see a huge wave of foreclosures. You'd see a massive wave of bankruptcies, and this would cause a massive downturn in the economy. That's why when a business that's too big to fail screws up, they don't have to pay the price. They just run on over to mommy and daddy, aka the government, and then the government will bail them out with a blank check, and then you, taxpayers, are left with the bill. That will be $1 trillion, please. Well, this 2020 crisis isn't going to be known as the crisis where we bailed out businesses that were too big to fail. It's going to be known as the crisis where we bailed out industries that were too big to let fail. Now, it's going one step further because there are talks of the government and the Fed bailing out a $42 trillion industry, the stock market. In March 2020, the stock market entered recession territory faster than we've ever seen happen in history. And now it is becoming a real possibility that the Fed, with the help of the government, might start buying up stocks to increase the value of the stock market and stocks on the stock market. So make sure you watch this video until the end because I'm going to show you how you can take advantage of this, whether or not this happens. But before we get into that, hit that thumbs up button below because if you don't, then YouTube's not going to show this video to anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. The 2008 crash was crazy, and during that crash, the government created a program called TARP, T-A-R-P, which stands for the Troubled Asset Relief Program. Isn't it interesting how toxic programs can have such nice and warm and fuzzy names? I mean, TARP, it sounds so warm and fuzzy. I just want to wrap myself all up in TARP. The 2008 crash was different than what we're seeing today because in 2008, that crash was primarily caused by the housing market collapse. During that time, banks were giving out easy 125% LTV mortgages, which meant if you wanted to buy a $100,000 house, the bank would oftentimes be willing to give you $125,000 with no income verification, no job check, no background check, and no credit check because, you know, homes never go down in value. This, surprisingly, led to millions and millions of people being underwater on homes that they couldn't afford. That was very bad, but then the banks made it 100 times worse because when they realized that these mortgages were just crap, they started bundling up these crap mortgages and calling them CDOs or collateralized debt obligations, and then they marketed and sold these CDOs as investments to other banks and investors. So the banks were first making money by selling loans to people who couldn't afford them, and then as soon as the bank made this loan, they wouldn't just sit around and wait for you to pay interest to the bank. They packaged up a bunch of loans which were pretty crappy, they marketed them as CDOs, and then they made a big profit selling these CDOs or packages of crap loans to other banks and investors. Now these crap loans were somebody else's problem. Well, when this house of cards came crumbling down, nobody wanted to buy these CDOs because everybody realized that the mortgages underlying the CDOs were crap. So the CDO was essentially just a package full of crap. That's when banks got really scared because they had spent hundreds of billions of dollars buying these CDOs thinking they'd be great investments, but now nobody wanted to buy them because these CDOs were worth well, whatever a package full of crap is worth. They were worth nothing. That's when the government created TARP as a program to purchase these crap packages, or CDOs, because nobody else wanted to buy them, and they did not want to see these banks fail because, well, these banks were too big to let fail. In other words, big banks spent hundreds of billions of dollars buying up these CDOs, thinking they were great investments, which soon became worth nearly nothing. And that's when the government created TARP to purchase these CDOs at top dollar. So the government printed hundreds of billions of dollars buying up these CDOs, which were in reality worth next to nothing. I wonder if the government will buy my bag of crap. Now in 2020, we're seeing something very similar happen. It's not the real estate market that's crumbling yet. It's big businesses on the stock market because, well, interest rates have been so low for a decade, so businesses have more debt than ever before. And now they're really starting to feel the pain. Not to mention the fact that businesses have less cash on hand than ever to protect them from emergencies because, well, a lot of businesses spent all their cash on stock buybacks to make their stock value a lot higher, which makes people feel good about their 401ks, but you can only inflate a balloon so much. This pandemic was the needle that popped the corporate debt balloon, and now big businesses and investors are paying the price, sort of. Big businesses borrowed so much money over the last decade, and now it's to the point where these loans are almost worthless, kind of like what happened to real estate loans back in 2008. The difference between now, 2020, and 2008 is that back in 2008, these real estate loans were secured by, well, real estate. And now, 2020, these big corporate loans are secured by a company's value, which depends on the stock market. That's why now in 2020, the Fed is buying up these corporate bond funds, which are funds that are made up of a whole bunch of corporate loans, because now nobody wants to buy these funds because people are realizing that these funds are comprised of a whole bunch of corporate loans that are crap. And so these corporate bond funds are just big packages of corporate loans that are crap. That's when the Fed, being the friendly person they are, raised their hand and they volunteered to buy hundreds of billions of dollars of these corporate bond funds, which are packages of crappy corporate loans. Sound familiar yet? Well, this time's a little bit different because back in 2008, the government and the Fed had a $700 billion limit as to how many crappy investments they could buy, and then that number was actually reduced to $435 billion a couple years later. Now in 2020, the Fed started with a $700 billion limit as to how many crappy investments they could buy, just like 2008, but instead of reducing that number, they actually increased that number to infinity, because then they came out and said that they'd be willing to buy an unlimited number of crappy investments. Doesn't that make you wonder where the Fed stores all their piles of crap? But now the Fed might be taking it one step further by buying the underlying asset that secures these loans, meaning the stocks or the companies on the stock market, because these loans are secured by companies which are on the stock market. And so now there's talks of the Fed potentially buying up stocks on the stock market to inflate the price of stocks. If this sounds crazy to you, that's probably because it is. To translate this in 2008 terms, this would be like the Fed buying up a bunch of these CDOs or crappy loans, which they did, and then buying the underlying asset, which is real estate. So this would be like the Fed going out in 2008 and buying hundreds of billions of dollars worth of properties. This way they make their loans look more valuable because there's buyers for these properties, which is the Fed. I'm going to go over exactly what this means in just a minute. But if you are interested in investing in the stock market, you need to use a stockbroker. And thanks to our sponsor Webull, that's very easy, and I got their link in the description below. Webull is a free app you can download to research stocks, make trades, and you don't have to pay a penny in commission to make your trades. The platform is very easy to use. You can stay up to date on your favorite stock or your favorite fund, and making trades just takes a couple clicks of a button. And best of all, at the time of me recording this video, Webull has a limited time promotion going on where they are giving Minority Mindset fans 2 free stocks just for creating an account and investing with them. So if you want to learn more, start investing, and get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to open an account, and it doesn't cost you a penny to make a trade. So if you want to learn more and get your free stocks, I got the links to where you can do that in the description below. At this point, you're probably wondering, why in the world would the Fed first want to buy these crappy investments and now want to buy the underlying asset or the stocks or the stock market? Well, there are a few potential reasons. First, you need to understand that the price of a stock depends on the number of buyers and sellers out there. If you have more buyers than sellers, the price of the stock will go up. If you have more sellers than buyers, the price of the stock will come down. So if the Fed can come in and they can start buying hundreds of billions of dollars worth of stocks, if not trillions of dollars worth of stocks, that means that there's a whole lot more buyers buying stocks because now the Fed is a massive, massive buyer, and this will make the price of the stock market and stocks go up. The Fed and the government might want to do this because, one, the Fed is already buying up these corporate bonds. Remember, these corporate bond funds are made up of corporate loans, which are now worthless, but these loans are secured by companies whose value depends on the value and strength of the stock market. So if the Fed can pump a whole bunch of money into the stock market, that makes stock prices in the stock market go up. And this would make the underlying asset or these companies underlying these loans look more valuable, at least on paper. And that might make these packages of crap that the Fed owns look more attractive. I know this is confusing, but try to imagine this. The Fed is printing a whole bunch of funny paper money to buy up these crap loan investments, which are secured by a company whose value depends on the stock market. Now, because the stock market has been tanking, the value of the underlying asset or the stocks or these companies are very low. And so now the Fed can print up a whole bunch of this funny paper money and buy up the underlying asset or this company to make the stock price go up, which might make these corporate loans look more valuable. And so the Fed might be able to magically turn two piles of crap into one pile of gold. Or at least imaginary gold. The Fed should really consider doing magic shows. Second, our current administration is up for re-election in November, and President Donald Trump has used the stock market as a measure of his success as the president. The Federal Reserve and the government are supposed to be two independent organizations. Supposed to be. But the chairman of the Fed is appointed by the President of the United States. So if the Fed administration want to keep their jobs, they probably want to get the president reelected. And what would help get the president reelected? Well, a strong stock market. Third, pressure by wealthy investors and banks. Now look, I'm a business owner and I'm an investor. Of course I want my businesses and my investments to be more valuable, but only if they're producing more value. Big banks and big corporations love high stock prices because that makes them look more valuable, on paper at least. And so there's probably a very good chance, now again, I don't have any insider information, but there's a good chance that these organizations are putting pressure on the Fed to pump a whole bunch of free money into the stock market to make their stock prices go up to make them look more wealthy. Is it fair? No, absolutely not. So what should you do? Well, take advantage of the stock market being on sale. History has shown us that over the long run, the stock market, the economy, and strong companies go up. Is it possible that things will be different this time? Sure, you can actually say that's possible this time because we are in uncharted territories. We have never seen a pandemic like this before, so it's very hard to predict what's going to happen next. Now, let me also remind you this. I'm just a random guy on YouTube. You should always do your own due diligence. Investing has risks. You are never guaranteed to make money when you invest money, and you might even lose money. So do your own due diligence and don't blindly listen to random people on YouTube. You can use this time as an opportunity to buy strong companies at a discounted price. And if you don't know how to find a strong company, then you can invest in what are called index funds, which are funds that mimic some of the strongest companies in the United States. This way you don't have to worry about picking the best company or worrying about your whole investment going to zero because you picked the wrong company. That way, if the Fed does go out and start buying stocks, which would be completely insane, you'd be on the winning side of that. As horrible as it is, you sitting there on the sidelines complaining about it won't help anyone. And even if the Fed doesn't go through with these stock purchases, which is also very likely and would probably be better for the economy long term, you still will likely come out on the winning side because history has shown us that over the long term, strong companies in the stock market do recover. Will this time be different? Maybe. If it's not, we have seen through history that over the long term, things recover. Like Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. The key is you need to stay up to date on what's happening in the finance and business world. This way you can make the smartest decisions with your money. And if you're looking for an easy way to do that, we created the free Minority Mindset newsletter where our team first breaks down the top finance and business news and then we show you how this news affects your wallet. This way you can be smart with your money. Our newsletter is completely free and you can subscribe to it by clicking the link up here or by clicking the link in the description below. Now, before I let you go, I have to ask you, what are your thoughts on the Fed potentially buying up stocks on the stock market? Is that something the Fed should do or something they should not do? Let me know your thoughts and why or why not in the comments below. Me and my team try to read every comment that we get, and I'm really interested to hear what your thoughts are on this. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. And if you want to learn more about what would happen if we print too much money, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.